No, you can't stop an idea that has reached its prime. In fact, if the idea is successful, it will tend to take all the money in the market, which is why they're called capital markets. This money will go to the place that can give it the best return and treat it the best. When that capital is moved around, people who follow the business take notice, and the over 10 window changes. In the last 24 hours, traders in Ether have raised their short positions, which is in line with. It was announced that Grayscale Investments would not be applying for an Ethereum Fears Exchange Trading Fund ETF. CoinMarketCap data shows that Ether's price has dropped by 1.85% in the last 24 hours and is now hanging near a key support level at $3,010. But measures for liquidation show that traders are more likely to see prices go down in the near future. For example, $345 million in short positions are ready to be liquidated if the price goes up by 3%. On the other hand, a drop of 3% to $2,920 would only wipe out long contracts worth $237 million. In May, Grayscale decided to pull its ETF application, and just 3 weeks before the U.S. Securities and Exchange Commission (SEC) was supposed to make a decision on it. Charles Edwards, co-founder of the digital assets hedge fund Cowl Investments and a crypto-on-chain expert, thinks that now might be a good time to put money into altcoins. He does warn people not to hold on to them for too long, though, pointing out that Bitcoin's price changes usually happen every 4 years. Edwards thinks that Bitcoin may hit its highest point either later this year or early next year. This could mean the start of a bear market. Alternative cryptocurrencies altcoins have generally gone through bigger and longer bear markets than Bitcoin. After MID, from 0 to 5, Edwards says it could be very risky to keep altcoins. He does admit that things could go differently from this cycle, though, since the SEC approved a spot Bitcoin ETF earlier this year. This decision could change how the market works, which could have an effect on how well altcoins and Ethereum do. Based on Edwards' analysis, altcoins might not grow as much as they have in the past if institutional demand drives the cycle. During all of that, there is this orange wave that is spreading. That wave is Bitcoin, and it is spreading into the capital markets through a dozen Bitcoin miners that are sold on the stock market. Companies like MicroStrategy, Tesla, Block, and Coinbase, which are all interested in Bitcoin, have helped it grow. Almost a dozen US-based ETFs are affected by it. We now also have ETFs based in Hong Kong, Australia, and some European countries. So as each of those things grows, they make money available. As their performance beats that of gold, the SP, or bonds, they make news and make their way to the front page of CNBC, Bloomberg, and Fox Business. That makes financial advisors and big investors think about some things, and those people then talk to other CFOs. So, I believe the orange tide is moving around. I think that businesses, especially ones that are sold on the stock market, will lean more to the right. It's likely that institutional buyers will act before businesses do. State-owned wealth funds will move ahead of the government. It will be the private companies that move ahead of the public ones. But if you look back at the last 15 years, you can say that the years from 2009 to 2020 were the crypto cowboy years. Those were the wild, crazy, offshore years, and they happened mostly before institutions and companies. I believe the most crazy years will be from 2020 to 2024, with COVID lockdowns and no interest rates. At that point, Fidelity's digital assets made the company much more noticeable. Coinbase and all the Bitcoin miners also went public. MicroStrategy started using Bitcoin as a strategy. Square changed its name to Block. Cash App grew very quickly. Finally, Tesla bought Bitcoin. So that was the crazy middle part where no one knew what would happen next. Bitcoin started to be used by corporations and institutions in 2024. There was some debate about whether this was for corporations and institutions or just a trend among individual investors in other countries, but that debate was settled in January, and by the end of 2024, it will be pretty clear. For the next 4 years, this is the beginning of institutional and business adoption. Right now is the time when BlackRock can go from having nothing to having $100 billion or more in Bitcoin, right? So there is a fight over who will securitize the ETF. Then we'll see some big banks like banks in South America, Europe, or the US take care of Bitcoin. Which one and who will be in charge of that space? We'll find out in 2028. The wait is still over. And this is the year that big businesses will start using Bitcoin as a stock product. It will be a lot more common after we get fair value accounting. You'll start to see a group of 20, 30, 40, 50, or 100 companies that deal with Bitcoin in some way. I also believe that the last 12 years, from 2028 to maybe 2040, will be a time of very fast growth. In a way, we'll see how everything works. it will be 90% to 95% clear how it's going to work. Those are the years of growth. BTC will have been around for 30 years by 2040, I think. We'll leave for the first 15 years. It's kind of like the teen years, the teenage years, and the early adult years. Then it will be like the first 30 years of the web, right? From there on out, it will be a growth business, but one that is kind of mature and easy to understand, and every business will want to work with it. It will be clear to everyone.